Finance Minister Nirmala Sitharaman could rise to present the Union Budget 2022 when the country is right in the middle of the third wave. This means that easing the burden of taxpayers and salaried classes is likely to be one of her priorities, as household incomes and consumption are still stressed due to the continuing uncertainty around COVID-19. By all accounts, including our own reportage at Business Standard, the budget makers may not bring any tweaks to personal income tax. The thinking in Finance Ministry is that if the existing rates are changed, while some section of taxpayers may benefit, others may see a rise in their income tax liabilities, since the government will also have to ensure that there is minimal revenue foregone. The view is that perhaps people are not ready for big changes in tax rates. The upcoming elections in states like Uttar Pradesh and Punjab is also a factor that the political leadership is considering. Privately, officials have conceded that had it not been for the pandemic, major personal income tax reforms would have been the next frontier for the government after GST and reduction in the corporate tax rate. These reforms would have involved major changes in tax rates, which could have increased the burden of some taxpayers.
Definitely not expecting any big tax cuts, both on personal income tax level and the corporate tax level. I think for corporates, the government has slashed the tax rate as much as it could have, back in 2019. We don't think that that's going to happen. But expectation definitely is for the government to sort of focus on healthcare, to focus on infrastructure, and more particularly, sort of rationalize the existing provisions. While that's been its effort over the last 2-3 years to, make sure that the tax provisions are rationalized, that there is ease of compliance and administration, there's still a lot of headroom, right? So, for example, if from the industry, there's a demand for allowing tax deduction for CSR expenses, which is currently not there.
Yes.
There is a big, a big voice in the industry which is saying that, look, this is not a personal expense that we're incurring, and therefore it should be tax deductible. Similarly, there are certain expenses that come out in any sort of M&A transaction, whether it's non-compete fee or goodwill expenses.
The last tweaks in the personal income tax rates came in the 2020-21 Union Budget, just before the pandemic struck India. Finance Minister Nirmala Sitharaman had announced reduced tax rates for those willing to forego certain exemptions and deductions. For the 5 to 7.5 lakh annual income bracket, the rate was reduced to 10% from 20%. Meanwhile, in corporate taxes, Sitharaman has already reduced rates in 2019. What this led to was, for the first time in at least 5 years, personal income tax in 2021 exceeded corporate taxes. This is a fact that the budget makers will be acutely aware of, and correcting this could mean widening the tax rate to bring in more small and medium-sized enterprises. But then, the centre will have to keep in mind the need for corporates to invest more. With that in mind, there could be some tax stops for investment in sunrise sectors like green energy and big infrastructure projects.
So I think having a look at the entire compliance burden from a regulatory and tax perspective would be a good thing for the government to take up in the coming year. The second thing, which is a little bit of concern, is the high tax rates, particularly for individuals at the highest level. Now, these are high net worth individuals or wealthy individuals, and the kind of taxes they have to pay in India, the maximum rate is 42-43%. So while it may sound justified and fair that if you are making money, you should pay tax, yet we forget that sometimes people have option of shifting their base to outside India. So I think that flight of capital and flight of HNIs, one must have a look at, review.
There are many considerations that Sitharaman will have to balance on the direct tax front. Tax revenues have outperformed expectations this year as the economy has recovered strongly. Budget makers will be keen to make sure that this is what happens in 2022-23 as well, while ensuring not to increase the tax burden on taxpayers and corporates.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.